Good afternoon, everybody. I hope you can hear me. I hope you can see me. If you can, it's great. Welcome to the next in the Admirals Trading Spotlight webinar series, where we are here today to talk about an introduction to scalping and intraday trading of European indices. Great subject for us to talk about. We could talk about it for days, but we've got about the next 40 minutes to cover that in. If you're joining us here live today for the session, you are very welcome. Great to have you all here. If you're watching this later on demand on the Admirals YouTube channel, then you're very welcome. It's great to have you here. Just be sure to make sure you subscribe to the Admirals YouTube channel and also give us a thumbs up if you find this useful, or if not, even thumbs down. Okay, that's fine. We appreciate all the feedback. Maybe you've got thoughts about other topics you'd like us to see discussed in the future. By all means, you can put that in the comments box either today here on the live session or later on Admirals YouTube. So, as I said, we're going to talk about an introduction to scalping and intraday trading of European indices. A fascinating subject. Okay, lots for us to cover. So, without further ado, let's crack on, shall we? Okay, so just bear with me a moment. What we'll do is I'll bring up the slides and we will dig into our session. So, bang, let's bring this all up here. Great. Hopefully here. Mike says you can hear us. That's great, Mike. Thank you. Super to have you here. So let's move this around and get ourselves properly set up, shall we? So as you said, scalping and intraday trading of European indices in particular. Now, as I always say, I appreciate here on the Admirals webinars that we have a broad range of experience in the room. We have people who are complete beginners to people who've been trading for a good while. You're all very welcome. Hopefully there'll be something that basically helps provide the newbies with a bit of an educated introduction, but also there'll be a few additional sort of tidbits for the kind of experienced trader to be able to work with. And as always, I suppose we have a global audience as well here on the Admirals webinars. So for wherever you are in the world, you're very welcome to join us. Great to have you here. Hope you're all doing well. Hope you're having a great trading week. And we really enjoy your support, seeing you here. So William says, good afternoon, everyone. And good afternoon to you, everyone. And I suppose it would be useful for me to get an understanding of who here in the room today has experience of scalping and intraday trading of, well, in general, but also of European indices. If you have, put it in there. Maybe you're here because you haven't, and that's absolutely fine. That's what these educational sessions are for. You're very welcome to tag in. So yeah, if you've got experience, it'd be great to hear it. What has been your own experience? It's always fascinating to hear how other traders engage with markets. So Sigurd says that he does. Okay, so that's great. If you want to put in there what you look at and what you focus at, we'll really appreciate that. Okay, and I'll be fascinated to hear how you all do. So Arturo says, he's more of an FX trader. William says, he's got a little bit of experience. That's great. Okay, that's absolutely fantastic. We're here for everybody here on these sessions. Excuse me, there. Obviously got a little bit of a little croak in my throat. Sigurd says mostly look at daily highs and lows and ranges based on specific time windows. Fancy that, Sigurd. Fancy that. That might be something that we touch upon a bit later. Excellent. So, as I said, it's great to have you all here. Remember, Admirals, they're a Forex and CFD broker who are licensed and regulated across a wide range of regulatory environments, providing competitive spreads on the most popular trading products and allowing you to engage with markets using both the MT4 and MT5 trading platform. If you have any questions about Admirals, then be sure to get in touch with your account representative, and they'll be very happy to help guide you. Damos says, hello, everybody. Hello to you as well. Everybody's very welcome. And if you want more timely content, okay, and news from Admirals, then be sure to subscribe to Admirals Telegram channel there. As you can see, at Admirals will get you linked into that, and that will provide you with as I said, more timely content. And my assistant will probably put up a link to it there as if by magic. There you go. It's in the chat there. If you're not sure of it, thank you, Nastia. And we have you can subscribe to Admirals Telegram channel there. So, what are we going to talk about today? Well, of course, we're going to talk about scalping and intraday trading. But for those of you who are very, very new, we'll talk about just a very simple, basic understanding of the differences between scalping and intraday trading. We'll have a little talk about what are the options for trading when we're coming towards the European indices, and we'll also take a look at, what are the best times and what are the places to trade them. And we'll also have a talk about a few of the sort of best setups, ones that I would look to utilize myself in my own particular trading. So, there's lots of us there for us to cover. If there's time at the end, we'll switch across to the Admirals platform to have a little look. Okay, I appreciate that. That always helps. But as I said, we've got plenty to cover today. For those of you who don't know me, my name's Paul. Traded for many, many years, okay, including trading for funds and for individuals. And primarily, I like to focus on trading FX, indices, and commodities. For longer term trading, I tend to be a sort of a trend trader, and for my shorter term, okay, intraday sort of scalping, I tend to be a mean reversion or reversal trader, and I'll show you a little few ideas and thoughts about that today. So here we go. You can see the main slide there. As it says, we're going to talk about scalping and intraday trading European indices. And as the slide says, in previous sessions, we have covered how to trade US and Asian indices on an intraday basis. And you will find those videos, those video recordings in the Admirals YouTube channel. So there is plenty of fabulous content on there. Be sure to sort of go and take a look at it. Hopefully, maybe my assistant can just put up here even just a link to the channel, the Admirals channel there. Okay, that would be that's always really useful just to help you. And as I said, we've done previous sessions on US and Asian indices and how you can trade them. And what we discussed was, how trading indices on an intraday basis, it's an attractive proposition to many traders due to the volatility, the liquidity, and the big moves. However, like in what we've shared in the webinars on trading all those indices and on FX, it's important to be thoroughly prepared for this endeavor. Okay, once you're starting to trade in intraday regimes and into scalping regimes, it is an awful lot more about your preparation. Okay, and your preparation can make a huge difference between your success or failure of the session. And there you go. Thank you. And my assistant there, absolutely spot on. So there's a link there. You can go through to it. That's fabulous. So what we're going to do today is we'll provide a sort of a follow-on from those previous sessions, and we'll provide a sort of a simple introduction to scalping and also intraday trading with a focus on European indices so that you are prepared for what awaits, okay, for what's coming to you. And as I said, there's a few people here in the room who've had a little bit of experience of doing that, and that's fabulous. I'm always interested to hear what their particular thoughts and comments are. But the element I want you to take away is it's about being prepared, okay? Part of these particular good sessions is we're kind of trying to provide a little bit of education, a little bit of insight into these particular environments. What you'll see is that knowledge dispels fear. All right, that's the way I've always been taught. And so by doing this, hopefully that'll just give you a little bit of knowledge to maybe sort of dispel a bit of fear, help give you a little bit of what is required, where you need to focus your time, energy, and resources on in order to make it the most successful endeavor for yourself. So, what is the difference between scalping and intraday trading? And you could go on about this for a good while, I'd say. But here's just a few bullet points, just for the people who are completely new to trading, to understand what's the difference between scalping and intraday trading. Generally, scalpers looking to gain profit from small price changes within the shortest time possible. It's in a way part of their risk management that they're actually only exposed to the market for as small a time as possible. That's what they're particularly looking for. And sometimes when you're scalping, that might actually only be like a couple of minutes, 1 or 2 minutes. You might be in and out, maybe even quicker than that, right? Generally, I find myself, even if I'm scalping, all right, my trades tend to sort of run for a little bit longer than that, okay? But it can be very, very short as well. If you catch a right move at the right time and the move has happened, okay, then invariably, that trade can do very well for you. Whereas an intraday trader, right, an intraday trader may hold a position till the end of the day, all right? But as a general rule, intraday traders will not hold a position overnight. So scalping's, sort of very short time frame. An intraday trader, could still be doing that, but also might have positions which they hold for the day, okay, for the particular session, but they won't hold them overnight, okay? Day trading is about being in and out within the day. That's what you're looking at. Scalping might be in and out within a couple of minutes, all right? You're really kind of super fast. As a general rule, scalpers are usually focusing their execution on sort of, the 1 to 5 minute time charts. Some people might use tick charts, okay, very fast tick charts, but as a general rule, okay, but they're using the kind of 1 to 5 minute charts. Whereas intraday traders, you'll find that they may also use, up to like 10 minute, 15 minute, 30 minute, 60 minutes charts, right? And excuse me, even a scalper might use a 60-minute chart, as you'll see, okay, just to basically give them a little bit of analysis, just give them a little bit of an overview of what's going on in that market. But generally, if you're scalping, you're executing on that kind of 1 and 5 minute time charts. And I'd be interested to know, of the people here who've joined us today, what, if any, experience do you have, okay, in the room of people trading on 1 and 5 minute time frames, okay? Is it something that you've done in the past? Is it something you do at the moment? Is it something that, you've looked at, but you've been perhaps maybe a little bit worried that, everything happens so very, very fast there, and been maybe a little bit deterred by that, which of course is absolutely fine. So when it comes to a scalper, what does make a good scalper? And these are some of the elements that, I've seen in my own work, okay, working on trading floors, working with traders, okay, and understanding what makes a good scalper. They have good analysis skills, all right, which is probably not a surprise, really. They have good analysis skills, but let me just be very clear on that. Let me clarify that. That doesn't mean that they're spending hours and hours doing lots of analysis. It doesn't mean that their charts are just full of all sorts of kind of squiggly lines and indicators, etc. What I mean is that they have a good ability to analyze the market based upon what they need, okay, what they're looking for in terms of, areas that they can do business at which there might be an opportunity for them to scalp the market, okay? So they are able to identify, very quickly where the market might be, might go to provide a, opportunity to do business, but equally, they can very quickly sort of identify, whether that market is, it's a range-bound day or it's a trending day, and adapt accordingly to that. What you will also find, all right, is that when it looks at how they operate, they're looking for a confluence of events around particular levels. And what I mean by that is that they rarely will take a trade just off one signal. So just off, let's say, just off one candlestick in the middle of nowhere. They won't do that. What they're looking for is a confluence of events. So it might be some price action candlestick at a particular level, maybe at a particular time, maybe at a big round number, okay, with a kind of a larger combination of price action, so that they've got 2 to 3 to 4 things coming together, and that is what gives them that's what gives them the sort of the trigger to be able to operate. And so they have a very simple and solid trading plan, okay, almost the sort of, kind of a one-page little thing that could sit on their knee and they could like checklist off to do it, until their response becomes automatic. All right, that's the way to do it. It includes very strong risk management, and we'll touch on that in a slide or two. But it does talk about very strong risk management, okay? Because things can happen very, very fast, okay? They can happen very fast for you. They can happen very fast against you, all right? And then with that, but then basically you have the opportunity to to have a very robust, all right, a very clear risk management plan. What I tend to find as well is that they tend to only focus on 1 or 2 instruments, okay? Sometimes maybe a couple more, but generally it's less is more, okay? They're focusing on 1 or 2 instruments and just become very good at understanding the behavior of that particular instrument. And within that, they might actually just focus on 1 setup, perhaps 2. They're not sort of trading 6, 10, 12, 15 different setups. They normally tend to be just focusing on 1 or 2 setups. So they're starting to get really very narrow, okay, very niche, very focused, all right? They're only focusing on a couple of instruments, they're only focusing on a couple of setups. And what you'll find is that, not only will it only be on like a couple of charts, maybe the 1 and the 5 minute charts, but also the time windows, okay? The thing about scalping is it can be quite draining. So, you might be a, super fit athlete, okay? Used to running marathons for fun, etc. But you will find that even just doing, 90 minutes or so of just trying to scalp markets will actually take a lot out of you. You're burning up an awful lot of brain power. You're burning up a lot of an emotional capital with that, okay? And so, what you'll find is scalping is not something you can do from 7 in the morning till 7 in the evening. Well, I mean, you can, but the likelihood of you doing it, well diminishes rapidly after about an hour or so, okay? What's better for you is to operate in maybe 45 to 90-minute blocks, okay, based upon, getting to know yourself, and, do a little block, take time away, okay, and then, maybe only do 1-2 sessions, a day. I know, some of the best traders I know, they'll literally trade for about 90 minutes on the American index in the afternoon, okay, and that's them done, that's their day. All right, as scalpers, it's a question of just, you're getting very focused, you're getting very niche, okay, and with that, that means, you have to be quite, you do have to be quite focused. And when you're only focusing on, a short time window on 1 or 2 instruments with 1, maybe 2 setups, what that helps them is that actually helps you be patient, because it is easy as an inexperienced trader. You're just looking at a chart. It's all over the place. It's moving. It's going fast. It's green. It's red candle. It's taking off. And it triggers you. Because you see moving, markets moving. You're experiencing a bit of fear of missing out. You don't want to, a bit of FOMO, and so you're trying to leap on. You want to chase it. That rarely happens. Rarely ends well. Okay. And what we're talking about is, if you're very clear about what setup you need, very clear about what instruments you're going to focus on, and very clear on what time windows you're going to focus on, well, then it becomes much easier for you to be patient and wait for it. When you know exactly what you're looking for, it does help you to be patient. It also helps you to be more decisive, which is something you're going to need, all right, as a scalper. You need to be able to be decisive, and it's easier to be decisive if you know exactly what you're looking for. Excuse me. So, when we look at the assets, the instruments, you can scalp pretty much anything, but today we're going to focus on, on European indices. And what I found over the years, and 2022 so far has been the same, is that there are times of the year where, there's more action in one particular asset class over the others. So, there will be times when FX is over, is better than equities, indices, fixed income, and crypto. Okay. We have had, the last couple of weeks has been very exciting on the indices markets. Okay. There's also been quite a lot of moves in the fixed income markets. The FX markets have been a little bit slower than they would normally be, and so that's what happens. The markets shift their emphasis, okay, their sort of capital flows, and so it's about starting to recognize quickly where the kind of the energy is, all right. And certainly the last couple of weeks we've seen a lot of moves in admittedly, particularly the US indices, but also in Asian and European indices, and sometimes that will be very clear. All right. Other times it will not. All right. And I wish I could give you a fail-safe catch-all rule that basically tells you when to focus on those particular asset classes, but I haven't found one myself yet. Okay. It's not something like I can say, April is always the best year for scalping indices, because I certainly haven't had any experience or haven't any kind of data to collect like that. What will happen is you'll just recognize where the sentiment is going, okay? And if you're just watching, keeping an eye on a good news feed, all right, just keeping on board, doing your good analysis, okay, working out when certain assets are, let's say, a little moribund, when others are starting to get a little bit more exciting, you'll very quickly start to identify where the particular, let's say, the flow and focus is. And with that in mind, for today's session, we're just going to have a little look at European indices in terms of the options for that. Mike says, do you watch seasonals? I will do, Mike, but not necessarily for scalping so much. Okay, certainly for my swing trading, that is something that can be of use. But for scalping, not as I have not found it as particularly prevalent or as useful. Other people may differ on that, and I'm always happy to hear of others' experience. But for scalping, seasonals hasn't really been kind of a play, shall we say. There are other things that were of more of higher priority too. So, before we look at any more detail, I always put this slide up. Whenever you're going to be doing scalping and intraday trading, a pre-market routine will help you. Remember what I was saying earlier, things happen fast, okay? So you need to be prepared, all right? You need to be prepared and ready. So, bang, you should be, if you're opening your chart, bang, identify the significant levels on your monthly, weekly, and daily charts, which you might think, well, Paul, I'm scalping, what do I care about what the monthly is? Remember what I was saying earlier is that, that those good scalpers, they start to identify areas, levels, okay, where there's a confluence of events happening that might provide them with a quick opportunity. And, you know, people know and recognize and understand those areas on monthly, weekly, daily charts where you know, the market is going to have to make a decision, and that's what we're looking at. We're looking at, you know, let's say, you know, a price action trigger at such particular levels, right, in those areas. And, you know, what I normally say to traders is even when scalping, when entering trade, be sure to wait for a break of the candle, all right? And that can go, the flip side is that, you know, if you're, wait for the candle to close as well, okay? Wait for the candle to close. If you're going to use a confluence, I don't know, let's say, you know, a pin bar off a particular level, make sure you wait until that candle closes, all right? And then wait for it to break before you get in, all right? You know, when things are happening fast, we can all get a little bit excited, and you all get a little bit, you know, just a little bit nervous, all right? And just, you know, just remind yourself to do that. But yeah, if you're going to use price action, stop loss on the other side of the candle. So there is always a stop loss. Stop loss is normally on the other side of a candle or on the other side of a range. No more than risking 1% per trade, and actually normally it's much less. Okay, you know, you'll find people will, you know, trade between about 0.2% up to 0.5%, you know, and perhaps up to 1%. Okay, especially if they're scalping. When it comes to targeting, you know, what I normally say is that, you know, about 1.5 to 1. All right, you know, it is ideal. Sometimes that's not always possible with scalping. Scalping might be 1 to 1, but what I'm always very clear on is that, you know, it should, you know, you ideally want asymmetric reward to risk. So if I'm going to risk, if I'm going to risk 100 euros, you know, I want to be able to take 125 euros, you know, from scalping. It should never be the other way around. Okay, you shouldn't be risking 150 euros to make 100 euros. Okay, because that, you know, that sets you up trouble. That sets you up for, you know, for a fail in the long run. And when it comes to your scalping, record, review, and repeat. You know, those of you who have joined me through these sessions, you'll have heard me sort of talking about this consistently. All right. You know, the only way you get better is from recording your trade, reviewing what you've done, and then repeating the good trades and cutting out the silly mistakes. You're only human, all right? You're going to make silly mistakes. All of us do, okay? Especially with trading, especially when things are happening really fast. That's okay, all right? That's okay. You don't need to beat yourself with a stick, all right? There's no need for that. But if you're recording your trades, if you're reviewing them, well, then, you know, over time, what happens is you start to work out, you know, what is working for you and what are these silly mistakes, and then you can focus on like just trying to eradicate the silly mistakes. And I don't actually believe you'll ever 100% fully get rid of them, because we're human and it's such a fluid, fast-moving, dynamic environment to operate in. But, you know, like any good business, you know, you want to basically be increasing your profit margins and reducing your mistakes. Okay, and that's what this is. We are running a business. And also, you know, let's set some kind of very simple rules and expectations for ourselves, right? Risk management is absolutely key. Honor it, okay? Fat fingers, all right, you know, they're going to happen when you're going to do things like scalping, all right? You're going to press buy instead of sell. You know, your position size might be, you know, wrong. You might, you know, the wrong instrument, okay? You know, so basically, especially when it comes to risk management, absolutely honor it, okay? I normally suggest on what they call static risk management for when you're scalping, as opposed to dynamic. Dynamic is where basically your actual position size will change, okay, based upon the percent of your account, okay, that you're utilizing for that. When it comes to static, what I normally say is, you know, if for that, let's say for that week, okay, you know, you're going to risk 0.5%, and you know, 0.5% is equivalent of, I don't know, 500 euros of your account. You stay static on that, okay, working on that, okay, for that week. Don't be trying to change it trade by trade based upon, you know, the size of your account, because actually you'll spend so much time trying to manage that you'll either miss trades, or you will screw up trades, or you will make, you know, mistakes of another sort, okay? So, you know, risk management is key. Simple, static risk management for that week. At the end of the week, review it, and then, you know, amend it for the week ahead. I also say conduct your analysis before trading, almost, you know, sort of just do that analysis, okay, before you even sort of, you know, kind of maybe even have your, you know, your platform open and ready to fire. Just conduct your analysis, okay, before trading. Maybe you do it the night before and identify some significant interesting levels, or at the weekend, whatever it works for you. It might sound very simplistic, but, you know, ensure you've got a good internet connection, all right, okay, and especially for scalping, because, you know, you need to have, you know, good levels of latency, all right, so that your positioning basically can get in and out pretty quickly, okay. So just ensure that. And For myself, if my internet connection is dodgy that day, because that happens to all of us, especially the last couple of years where you might have been working from home. If your internet connection has not been fantastic, for me that can actually be a no-go for scalping. Okay, I might be able to put swing positions on, but when it's scalping, you want to make sure that you've got a good internet connection. And ensure you're rested and prepared for the session. All right, okay. If you've had a late night last night, you've been out partying, you've been out down the disco. All right, okay. Only a few hours sleep. All right, maybe feeling a little bit jaded. That's not the morning to be going doing a little bit of scalping, ladies and gentlemen. All right, okay. Make sure you're rested. Make sure you're prepared. Okay, put yourself in the best place to basically deliver the best performance you can. Remember, trading isn't a 9-to-5 job. Trading is a performance job, and so you're paid to perform. So you should put yourself in the best position to perform. So, when it comes to trading indices, what I very often find is that, and I've got lots of clients, colleagues, friends, okay, who, trade like this, and namely, what they'll do based upon, let's say, EU timings. I know it might be different because we have a global audience here, but very often you'll find they'll focus on trading, European indices in the mornings, and then they'll trade US indices in the afternoon. All right. And as I said, there are previous webinars on that. So what you will actually find is that there are a lot of traders who will trade the DAX in the morning and also then trade the Dow and the S&P in the afternoon. That is changing a little bit, okay, but generally the focus is still on, if you're going to trade a European index in the morning, well, a lot of people will focus on trading the DAX, right? And today we are focusing on European indices. So, when you have a look at what is provided or offered to you by Admirals, you'll see actually when it comes to the European indices, there's actually a very, very broad spectrum of opportunity there in terms of lots of different instruments there, from the DAX, the UK's FTSE, the French CAC, the Italian MIB, all right, the Spanish IBEX, etc. So there is and a whole host of others. There are an awful lot of European indices that you can basically look to focus on. Personally, okay, and this is my personal choice. All right, this is my personal choice. Is that I kind of like to look at the FTSE and the CAC, and I will trade the FTSE, but a lot of the focus will go on to the DAX or the DAX 40 as it would be now, and that's what I suggest to people to do. Is to just remember what I said earlier. Just pick one or two instruments. I might look at 3 or 4, but I'm really only focusing on 1 or 2 instruments. And with that, okay, then only focusing on just a couple of little simple setups, okay, that are of that work for me, okay, that I can recognize easily when I'm looking at the charts. So, how do we actually trade indices? All right, what can be our edge? We're always looking for an edge as a trader, and in previous sessions we did, especially on the US indices, is that we discussed how actually a lot of them are very driven by algos these days, and those algos can be used for our benefit. Okay, we can actually use them, and we use them by basically when we see that correlation across those sort of 4 main American indexes, and the Dow, the S&P, the Nasdaq, the Russell. That actually gives us kind of the warm fuzzy that and algos are in control, and actually what we're going to do is we're not going to fight them, we're going to just try and surf with them. Now, it stands that there are still those kind of similar correlations for European indices, but they're not as strong. They're not as certainly not as strong as those between the US indices between themselves. But you will find that there are some correlations, and that can be of help to us. Okay, sometimes the correlations aren't necessarily as particularly strong. Okay, they're not necessarily as as accurate as on the Americans, but you can still do that. In this particular instance, I've got the DAX here, the FTSE there, the French CAC there, the Spanish IBEX. And what we can see is, and we'll look at the charts a little bit more in depth, is that after the opening of the session, price sort of pulled down. You can see that all across the way. Okay, just went sideways there on the IBEX before reversing and then basically running away for the rest of the day. Hopefully, you can see that there. And so when we see that that does help. When there's a massive disconnect between all those indices, that is when I personally get a little bit nervous. That's when I tend to basically rein myself in. Okay, but what I want to do is see that there's some nice correlation there. Okay, it's not always perfect, but you should be able to understand general theme, the general rule. And with that, I don't want to particularly fight that. Okay, I want to try and utilize that for my own best, my own best endeavors, and actually see what I can do to work with that. So, what I have found for myself, when in terms of looking at particular setups or particular ways to trade, in particular areas that I'm interested in, what I do is, you'll find I use very simple tools that, some of them I can utilize across all timeframes and instruments. I've always been very big on, sort of being instrument and timeframe agnostic generally in setups, because what I want to do is to be able to practice doing that setup across all sorts of times. So I have that kind of cognitive recognition. I start to, you start to very quickly see when that setup is beginning to build, so I can get ready, okay, and then I'm actually able to basically attack the market. So certainly for on, let's say, on the intraday and the scalping basis, I particularly like kind of previous highs and lows, all right, previous days highs and lows, previous weeks highs and lows, okay, could even be previous months or even previous years highs and lows, but they don't happen as often. But certainly previous days highs and lows, okay, previous weeks highs and lows, they are areas where I'm starting to get interested, okay, interested in about how to do my business, okay, how to start to focus on that. I particularly like sort of double tops and bottoms, okay, reversals. Remember what I was saying, I'm very much like a mean reversion reversal trader, and also price action setups and combinations, which we've done a couple of webinars on those price action combinations. Once again, you can find that in the Admirals YouTube channel there, so be sure to go in there. So things like golfing candles, pin bars, key reversal candles, okay, which I particularly like when I'm looking to particularly scalp here, okay. And so this is an example here, okay. Here we go. In that, what we had is effectively price coming down here, and then what we had is it hits yesterday's low. And what it's doing on yesterday's low is it's putting in a double bottom, okay, and that double bottom there, okay, that 0.3 there, it is also a pin bar, which is also an engulfing candle, which is also a key reversal candle. Bang, that's my trade. All right, okay. Remember what I said earlier about a confluence of events. I've had a little bit of a there's been a little bit of a trend beforehand. Price has hit a level where I know that there's going to be markets going to be doing their business. Price then puts in a price action combo, a price action pattern, and then also that pattern is finished with a particular candlestick. Okay, in that case, it's kind of a bit of it's a multiple one. Okay, so when I see that, that's my trade. All right, and I can see that, and I can go through my files over there, okay, and I've got lots of prints off of just lots and lots and lots and lots of trades like that, okay. So to the fact that as soon as I see it, I'm a case of bang, I know what I'm looking to do. Remember what I was saying earlier is that those good scalpers, they have one or two setups that they just basically look to really focus on getting good at, and so that when they know it, they know to be patient, to wait for it, and when they see it happening, bang, they know where to go. I know where I'm getting in. Okay, I know exactly where I'm getting in. I know exactly where my stop is. If I'm wrong, okay, if I'm wrong, the stop goes beneath the low. What I do as an aside, what you just have to recognize is that generally on the 1 minute chart, trying to get an order onto the platform for your stop loss. It's not always easy, because basically things are moving fast and everything's very small. So you have to be ready and prepared to basically be able to sort of to kill that position as quickly as needs be, should the trade not work out with you. And that's what I'm saying. Something you need to practice at and work at, okay, so that you've got that ability to execute your setups flawlessly. Sig says Admirals for MT4 and 5 specialism has a great indicator that shows highs and lows. Yes, it does. Okay, yep. They have an indicator there that shows highs and lows of sessions and stuff. You can also find other indicators there that will show you, previous days highs, previous weeks highs. They're all really good. There are lots of it there on the Admirals platforms, which you can utilize. You'll find that it's part of your homework to take away from this session. I always like to give you a little bit of homework, something to take away and work at to improve yourself as a trader. Haresh has asked me, what moving averages am I using there? You'll find that I kind of tend to use pretty simple ones. The blue is a 20-period moving average. Okay, the red is a 50, and then invariably the sort of dotted brown line is a 13 EMA. Okay, and I also have a 200 EMA in there. So, the moving averages I will have across all my time frames. Generally, what I tend to find though for kind of scalping though is that basically, I'm looking at price. Okay, I'm making my decision on price, not necessarily on moving averages. But what I do find very useful is that you might be the kind of the 50-period moving average or the 200-period moving average might act as a place where I exit the trade. Okay, I might have a profit target there, or what I might do is, as part of my plan, is have a decision that if it starts to reject at the 50, I'll just cut the trade. In this particular case, you can see actually it went through, but that's not always the way. So I find that kind of 50 is kind of be quite useful, all right, in terms of just identifying it as an area that price will either retrace back to. That might sort of give me an idea as to either a potential target or potential way to sort of take a position off, or to basically try and ride it if possible. Okay, if the conditions allow. What you'll see here is what I'll have is, even though you're looking at scalping, you can set up a profile here where you've got the majority of the European kind of indices. All right, I also have the German bonds in there as well, because sometimes that can be doing the opposite of what the DAX is doing. So that can sometimes it's that correlation there, and sometimes, as I said, you can see there's a correlation there. Okay, basically they've had a bit of a rally there. It's not, as I said, perhaps not as always as clear and as pretty as the let's say the American indexes, but that's fine. Welcome to trading, ladies and gentlemen. It's not always a pretty picture on a chart. Okay, part of it is being able to, as I said, sort of look at what's out there and build a picture of what you're actually thinking, what you're actually looking there. Okay, so I hope that just gives you a little bit of help and insight. Let's just clear these drawings down. So, but what I was suggesting is, start with, have a little look at the 1 hour chart. Okay, just look at how prices reacted. How did price end the overnight session? Okay, maybe how did it end the US session? Did it trade over in the Asian session? Okay, if there's like electronic contract, so you can just start to identify maybe even smaller sort of levels of support resistance that are a move on. Mike asks, after a rapid move up, do you look for a reversal? That's a distinct possibility, Mike, which we might come on to in a moment. All right, but start that, just build a little picture. Okay, just get a little bit of an understanding. Is the market trending? Is the market going sideways? All right, is there will there be opportunities? And then you're almost like kind of looking to sort of step down. All right, step down the kind of the charts. All right, to get yourself into the move. It's kind of like, you're moving from driving a nice sort of a slow Mondeo, to driving a Formula One car. Okay, in terms of when you're going down the times from the hour, 30-minute, 50-minute, 5-minute, 1, things are going to be happening fast. But if you have an overall picture to work with, it just makes things a little bit more sensible, for you. Okay, and it helps you, just as I said, just start to look at, is there correlation going on? Is there elements happening there? Another thing I also use is I use a particular indicator here that hopefully just gives you an indication of you can utilize it to sort of draw particular boxes on your times. So what I will have them there, as you'll see, I'll have some of those set up. Okay, I think it's called iSessions. I think it's a free indicator you get for MT4 and MT5. I will use that to identify, I'll then use it to identify the overnight Asian session and also the US session, so that when I'm looking very quickly at a chart, and scaling out, I can see where the what happened during the Asian session. Did all of those indices sort of just basically compress, which is generally what happens, not always, right? And then did they expand out in the European session? Okay, you start to, as I said, you're starting to use this to just help yourself get a little bit of an idea of the rhythm, right? The kind of the rhythm of the chart and what's actually happening, what's actually occurring. And then, as I said, if I've got those correlations for major indices, all right, well then I'm starting to sort of just hone down and focus down. Now, this is particularly on the 15-minute chart, but we'll have a little quick look at further down from there, which is namely just a little bit like what I was saying earlier, that ideally I like to particularly focus on the DAX and then also the FTSE, but mostly the DAX. And what I can see here, okay, what I'm interested in is, you probably can see it there. I've got the grey boxes there. So that'll be the US session. This is the Asian session here. That's the Asian session there. So I'm just getting an idea of how price is reacting at the Asian session, and in that particular movement, what happened is in the morning, the market moved down to where the Asian session was, which was also yesterday's low, as I said before, putting in a double bottom before it actually moved away. Right at the same time as that, basically the FTSE was doing a kind of a scruffy triple bottom there on the 50 period moving average before price rallied up there. Right, so there's a correlation. As I said, it's not as clean, as pretty as the when the US indices are operating there. But as I said, welcome to trading. You're just looking, as I said, looking ideally probably to focus on the DAX and look at how that basically impacts and how the others run with the DAX. But what I can do is here just to show sort of examples of price action combination setups here. This is effectively the kind of the overnight session, right? The sort of American session is the overnight, and then what I'm looking at is this blue line here, right, is effectively that'll be yesterday's high, and what we're seeing is that basically price has rallied up to it, and see how it puts in rejection candles there, okay, inside bars, okay, inside bars. That's a nice, let me clear this for you, a nice clear double top there, okay, before price comes back down. Remember what I was saying, the kind of 50 period moving average can sometimes act as kind of a nice target, all right, a nice maneuver there. And so that's what it's saying, price might expand out, and then basically, as it looks to mean revert, that is where I'm actually looking to sort of hopefully do my business. And what I know some good trader friends of mine do who trade like this is once they know what the previous day high or low is, well, they will actually put alerts on their MetaTrader platform, so that basically price effectively sort of moves up to those areas, it'll alert them, and then they'll actually swing back. It's their way of managing their energy. They know they can't just sit there watching every moment on the chart. So actually what they can do is they set some alerts and then basically go about their working day or whatever they're doing and stuff, and then when it pings, that's when they turn their focus to get ready to see if it provides them the opportunity that they are particularly looking for. And that's just I said one of I think the challenges for intraday trading into scalping is trying to identify whether that is it's a trending day or it is a sort of congested day or a consolidating day. My view has always been is that on shorter time frames, okay, the intraday base is 15-minute scalping. The vast majority of the time, 78% of the time, price is actually sort of range bound. So I'm expecting for the most part the price to be push out a little bit, but then revert back to the mean. However, there are days, there will be 1 to 2 days, sessions a week when actually it will trend. And what you're looking to do is, either you avoid that, okay, if you're a mean reversion trader, or you have a way to basically to operate that and identify. And what we can see here is, this is just an example on the FTSE, is that you can see that all the way through that kind of the early session, the overnight session, the electronic contract, was that basically there was a downtrend. Price then pulls up. Price puts in, a 3-bar reversal there, which is, what we've talked about. There's, once again, that's a covered session, and what we can see is that was a pullback in a downtrend. Now, nobody knew that kind of the news, the price was going to drop like that. That was on particularly on news. But what it is a case of is recognizing that there was already a trend in there. Prices had a little bit of a pullback before it actually moved in, and then actually what happens is later in the day is that actually what happens is that there is where it puts in its inverse head and shoulders, right, which then becomes as I said, that becomes a mean reversion trade back into the range, okay, and that's what we're looking at there. So as I said, it is one of the challenges, okay, of identifying that early, is in the day, is it going to be a trending day or is it going to be a standard mean reversion day? But when you see there's a trend coming into it, a little bit of a pullback, a strong pin bar to push it down, well then invariably you can utilize that information to either stay out if you're a mean reversion trader, or to basically, to basically flip to being recognizing it's a trending day and working with what you've got there. So before we've got a couple of minutes, so before we switch across to the charts, all right, here's your final point. Here's a little bit of a homework. So what I suggest is go back to your MetaTrader platform if you haven't already. Build a profile for your European indices on whether it be your MT4, MT5, and just watch how those markets react on an intraday basis. You can see I've got one set up with the DAX, the FTSE, okay, the IBEX, and the CAC. Right? Are they moving in unison? Is there is there correlation between them, or are they all moving in separate directions? Okay, if they are, my normal suggestion is to just hang fire. Have a look at, how does price react at previous highs and lows? Okay, previous support and resistance levels, and when it did it create an opportunity? Have a little look on the 5-minute, the 1-minute chart. Was there actually turning points there provided by some particular whether it be a price action candlestick or maybe a price action combination itself? So in conclusion, scalping requires a good plan, focus, excellent risk management, and flawless execution. So there's plenty for you to be working on. As well as US indices, we now know that Euro indices, they're an exciting asset class to trade, and it does provide opportunity, but it is important to be thoroughly prepared and be aware of the upcoming news items. Is there a strong correlation? Great. If not, then my suggestion is, as a beginner, is avoid it. Is one index in charge, which normally is the DAX, okay? And you can usually use that for your focus point for the session. And are there any particular static or dynamic levels of support or resistance in play? Make sure that you draw them on. As always, manage risk. So we've got a moment or two. We'll just have a quick look at the live markets. All right. If you want to get in touch with us, you can do so, admiralmarkets.com. What there will also be is after this particular session, you'll get sent a little feedback form. We'd really appreciate it. Just take a few moments, okay? If this has helped you, what could be better, what could help you, what future sessions you would like to see us do, that would be absolutely fabulous. So just bear with us a second. We'll quickly switch across to the charts as I can. Sigurd's the indicator for the box is called the I sessions. Okay, so just bear with me a moment. Let's just try and bring up the charts here. I've got it on here. I think it should be hopefully all set up. Bang. Okay. Bang. There we go. So as I said, here is the example here. What we can see is bang. Starting off 15-minute chart. This morning we had a nice pullback before it moved. The CAC just basically moved. You can see that basically the IBEX, the three of them were in moving, whereas actually the FTSE took a lot longer to basically to follow through. Okay, it's only following through now. That can happen. Okay, that can happen. If we look at basically our session here, if we go down to the 5-minute chart. Remember what I'm looking at is here we come out of the Asian session. Okay, notice how it tags it and then it drops away, it pulls back. We're already in a trend, and then what we see is that it gets down to what is yesterday's high, and it becomes an area for where it's a turnaround. Okay, where it turns around and rallies its way up. And this is a trending day. All right. Remember what I'm saying is one of the challenges to begin with, but actually, once you can able to identify as a trending day, well then you don't particularly want to be fighting that. Now there will be some people who try to trade it during the afternoon. My personal view is, whilst you can, the sort of the better trading tends to be on the US sessions in the afternoon. What would be the afternoon for us here in Europe? So I'm just going to look at that here. Let me just bring this up and maneuver this about a bit here. And what we can see, excuse me, is that hopefully you can see the charts. Hopefully you can see the charts there. As I said, it's a little bit of a trending day. Is the 1-minute chart, okay? And what I'm interested in, let's zoom into there, is, as I said, this is the DAX coming out of the Asian session. You can see how it tapped that with a really big pin bar, which became, kind of a double top there before price sort of fell down to the 200, came up, provides a higher low, and then price got squeezed before it dropped down. And as we sort of just looked a little bit there before, it's clear this is that we went, there we go, bang. What we saw is we went right down to what was above it. We went down to yesterday's high. been in a trend. Okay, you can see the trend from the US session, overnight session, the pullback on that. That is then basically, you know, a three bar reversal there that happened there on the intraday, all right, which also then became a morning star formation. And what we can see is that, you know, it has been a trending day there, okay, on the DAX for today. So when it's a, you know, trending day, as I said, you know, you don't fight it, all right, or, you know, if you have the ability, you flip and you look to particularly join it. Okay, so for me, it's not really the kind of the trade setups I want, because I'm actually a mean reversion trader. Okay, and when I look for that, you know, it's not happening at any particular significant level there for me today, right, to join that session. So not really the sort of, you know, an exciting session for me there. And that's what happens. You know, we're waiting. Good traders are waiting for the environment to hit them rather than try to force a trade onto the market. So unfortunately, ladies and gentlemen, we've run out of time a bit there. Okay, I do hope you found that useful. All right, I hope you found that interesting, giving just a little bit of insight into intraday trading and scalping. Okay, and looking at, you know, what's how to do it on European indices. As I said, at the end of this, there'll be a little feedback form come through. It'd be really great and helpful to basically you know, for you to fill that in. Gives you an opportunity also to give us an idea of what you'd like to see in the future, if there are any particular sessions there that work for you. And as always, I wish you the very best of success with your own trading, and I look forward to speaking to you soon. Trade well, everybody. Cheers.